Hi guys, hi everyone. Can you guys hear me? Yes, sound is good. Okay. Hi everyone. Good morning, good afternoon, good evening, wherever you are. Welcome to IC Market webinar. Hi, Karim. How you doing? Hello, Donwu, Donwao. How to pronounce your names? How you doing? Hi everyone. Good morning. Good afternoon, good evening. Welcome everyone. Thanks for joining me. Shall we just wait for 1 to 2 minutes and then I will start the session. So today, you can see on the screen, we will talk about breakout versus the breakout. Okay. I'm good. Winter here is cold. Okay, it's cold. It's very hot here in Singapore. Where you are tuning in from? Which country? Just me Dawn always. Okay, Mr. Dawn. Hi Dawn, nice to see you. But Mentino second perform medicine. You okay? I'm gonna reply you in English. You can let me reply. You can IC market. You can use IC market. You can use C trader or MT5. Okay, you just pick one because I use two platform. I use I use the C trader and I use the MT5. Okay, my first platform that I used with IC market was C trader. Hey Ajay, nice to see you. I live nearby Geneva in Switzerland. Wow, one day I'm gonna go there. Okay, one of my country, but the thing is I don't like to take the plane, like the longest that I flew to France, it's like 11 to 12 hours direct. It's super tiring. That is the furthest I go to France. Yeah. Hi, okay. How many of you guys right now? Oh, let me see. What? Oh no. Let me. Wow, go has just fly away.
Filled.
Let me see. Hang on guys, I think I just saw Go has sorry triggers the anyway, she will just begin our session. Okay, so I don't want to keep you guys waiting. Okay, again guys, good morning, good afternoon, good evening, wherever you are. Welcome to IC Market webinar. And I mentioned early on, okay, as you can see here, we're gonna talk about breakout and breakout. Okay, I'm gonna share with you guys how I look and how we're gonna trade with either breakout or wait for the retest. Okay, so before we start the webinar, disclaimer first, right guys? So as you can see and you know that this webinar is purely educational in nature. Alright, nothing in this video should be considered as an investment recommendation or any kind of advisor. So if you want to follow my don't want to say signal or my trade setup. Okay, just be cautious because I could be wrong, and sometime, okay, my setup I also hit stop loss. Okay, not every trade I have 100% win rate. Okay, my win rate would be between 70 to 80%, not 100%. Okay, and risk warning over here, trading forex and CFD carry significant risk and it may not suitable for all investor. Okay, okay, let me find the next one. Okay, so it's about myself. My name is Peggy. I'm an investment analyst and a prop trader at Average Foraging Group. Okay, so let me find. So the agenda for today, okay, we're going to look for a liquidity grab, retest strategy, and risk management. Okay, so what is the breakout? We have heard about it so many times. What the breakout? So the breakout occur when price move beyond the certain level at like support and resistance or demand and supply level. Okay, with increased momentum and volume, signaling a potential new trend direction. So whenever you look at the chart, you look for the true breakout sign. Okay, so one is thing like you look for the volume with a strong volume, or you use a momentum continuation, which is momentum. I think you can use the MACD because currently I'm using MACD to look for the momentum. Okay, clear close beyond the level, meaning that you need to wait for price, okay, to close above the key level, not a wick, have to be the real bodies. Okay, follow through the movements. Okay, I'm gonna explain that in the live chat later. What about the fake out warning sign? You can look for the volume like very low volume, quick reversal. So meaning like whenever you see like price reach the certain level and then you see like quick rejection, a wick, and then reverse, we know that that's going to be the free breakout. Okay, which is it's gonna related to this here. Okay, meaning that whenever you see the wick, you should wait for the real body to close beyond the key level. Okay, no follow through, meaning that whenever you see the wick or rising like that, you shouldn't have the kind of like FOMO. Okay, like the buy entry. Let's say you see price spike up and then you keep buying because they're gonna have the quick reverse. We're gonna see this when usually we see it when there's a high impact news. Whenever you see the high impact news, you're going to see the quick reversal and rejection. Wick with the long wick could be something like that. It is price just okay. These are the resistance level. For example, price just went boom, right, and after that quick reverse. So this is a fake breakout. So if you want to trade, you should wait for the pullback or retest and then you sell. Okay, I'm gonna show you later. I'm gonna use XAUUSD or gold for our example later. Okay, so understanding the liquidity graph. Okay, so the liquidity basically the price move that trigger stop losses and pending order at the key level before reversing in the opposite direction. And when it happened, why they happen? So we know that the large institution need liquidity to fill their order. Stop losses clusters at key high low provide that liquidity. So the common liquidity, you will know that those like previous swing high and the previous swing low, those chart pattern like double top, double bottom, or trend line liquidity, or those are round number, those anything that ending with like 0 or ending with 5, those is like psychological number. Okay, for let me even gonna find the example of this. I'm gonna open the chart and I'm gonna use IC market chart. You hang on. Okay. Okay. Wow, what is happening here? Okay, you just hang on. Right now, oh, okay, let's just look at the XAUUSD. This was my setup, I think last week. Is this I've seen last week? I think this is really quick bounce from the support. This is support level, really at this level and rising so strong. Okay, anyway, now we're gonna look for the liquidity. Those like one is this one. I'm gonna consider this a liquidity here. Okay, so this, of course, if you want to trade, you're gonna identify this is your resistance level. Okay, for the smart money, okay, this they will identify this is their liquidity. You can see that multi swing high, right? This is a multi swing high resistance level. Okay, so you see that, but for like a traditional trader, we identify this one at our maybe here I just say this is my resistance basically. So we're gonna sell the resistance, right? So when price go back here, you still selling. So when price go back up again, they make some the retail trader, right? They're gonna sell here again, right? But for the smart money, you will see that you're gonna get this is for them the liquidity, right? You will see that when price go back to first resistance here, you'll see that you will going to see this is the clear to ask you or to show you, okay, you can sell, right? Let's say you sell, then you see the rejection. There may be some or few, maybe so many traders that if price go back up again, then you're gonna sell, then you're gonna get stop out. One of these I will call that they're gonna clear. This is one of them, their liquidity. Okay, or another one, this is for the liquidity at the resistance level. Okay, and another one, this one I think I'm gonna go to the lower time frame. I'm gonna go to the lower time frame, which is I'm gonna show you here. Okay, okay. Let me move to here. I'm go on higher time frame first. Okay, so on the higher time frame, right, on the higher time frame, we know that, okay, this is our equal high. This should be the high, and this would be the low, right? This is the high or ATH. Okay, so now if you're gonna look, we know that price has made the boss here. Okay, they have another not boss, the one is the shock or chain of character, and then they're supposed to grow, and this is, if they can close below this low, they're gonna have the BOS or breakout structure, but it's not, right? Price, I want to show you, hang on, I want to explain closely. Lower low, lower high, lower low, right? Lower low, lower high here, and they start to make the higher low, right? And in this case, this was the liquidity, or you will get stop out, because if you want to sell at the resistance level, you will get stop out because this is imbalance breakable. So this is for the smart money, your chain of character, and then after that price also go break this, and then this your boss. Okay, and now at this level, okay, at this level, maybe in the lower time frame, this your the resistance level. right? This is your resistance level, correct? First, so price went up here. Traditional, we're gonna sell. We're gonna sell where? We're gonna sell at the next line, right? We're gonna sell at the next line right here, correct? So now my first resistance, I'm gonna sell. I'm gonna sell here. I'm gonna sell. Okay. So I'm gonna go to the lower time frame. Let's say. Okay. And then in the even M15, you still can say that price will make the boss breakout structure, right? This is the price falling here. Okay, now we wait. It's still falling. Okay, and then you might say, is this going to fall from this level? No, right? Because from this one, if you were to look at market structure, where is the high, where is the low? This is the recent low. This is still the high. This could be the equal high, right? So basically, if price go back here again, you're gonna sell. In this one, this is one of liquidity, right? Then this is the low, right? And this is the low. Okay, and now we see after that price go up and clear your liquidity, clear liquidity. Okay, and then go to the resistance level, but in the go to M5 H1, what do you see? You see the rejection. Are we want to sell now? Can we sell now based on this one? No, right? In order for you to sell now, so in the M5, this is gonna be your high, this is gonna still be your low. So price still make the higher high. This one you will get stop out first at the liquidity, at the multi-swing high resistance. The next resistance is right there. So what you need to do, you need to wait for price to show you the chain of character in the lower time frame. Okay, so I go up, right? So this was my high. So right now, okay, let's say you can stop out here. One, you can stop out because of this. And second, in M5, what do you see that? You see this is the equal high, double top, double top, double top here, correct? This is your double top, correct? And then you see that, oh, in lower time frame I saw this neckline, so you sell, you stop loss, put the word this week, for example. This is your SL. Let's say you put your SL as double top, then price make the M pattern, pull back, you sell, because we toss, right? Whenever you see M pattern at the neckline, you sell. Okay, after they sell, price falling, make you happy, right? Falling a little bit, and after that get the stop out. You will get stop out. You can see that you will get stop out because at the double top here. And now I'm gonna go to the lower time frame. Why you cannot sell? You look at the market structure, price still haven't break. In this one, if you were to sell at the double top here or at the next line, right? Price still make the higher high from here. Even though from here, still make the higher high, higher low, higher high, right? Higher low. They're gonna go up here. So now they're still, right? You still haven't yet. They still go back. Now I want to go to the M. You go to H1. You see in H1 price still make the higher high, higher low. This is the low, this is high in the higher time frame. You go on the H4, right? In the H4. So you are right now in H4. I'm gonna remove, right? In H4 right now, you kind of like see the rejection. Maybe see the rejection, and you say, maybe here might have another like a FBG somewhere around here, right? These are FBG or fair value gap. You see, then you see the rejection. I'm gonna go to the lower time frame. I want to see the chain of character or market structure shift. But in order for them to fall, they need to have clear liquidity first. So this is the high. Okay. So I want price to just go back up and clear liquidity first. Grab have the liquidity grab, right? This is what equal high, right? This is equal high, so it's there liquidity. We're not gonna sell, so price need to go above to clear the stop loss first, or hit the stop loss and price falling. Now not yet, right? This is your equal high. Same pattern, same this M pattern, go back again. I think this at FVG you're gonna sell. You see, okay, you sell, right? They say you sell here, and price just falling, and now go back up again, right? Go back up again, but you see that haven't yet, right? And you might see, okay, this the another supply zone. They go to the supply zone here. What do you see that? You will sell for a few pips from here to here, 70 pips. Let's say you didn't close, right? Price go and clear. You see that? You go high, got stop loss, right? Clear your stop loss and then falling. So this is your liquidity. And go to M15. Okay, M15. After clear, you see that a long wick, quick reverse, right? And after that, you see that any price action, and then it's starting to fall. And now, where's the low? Higher high, higher low, higher high, higher low, higher high. Price need to close below, which is the real body, not the wick, right? Okay, you see that? Price close below and go back and reverse here. That's why you can have another sell like here, right? And then price is falling. Now it's gonna pull back. It's gonna pull back. So now I want to wait for the sell entry. I want to make a sell entry. I'm gonna to M5. I want to wait for the pullback. One is this one. React. I need to go to the M15, and remember that price is still within our FVG in H4. Okay, price still within our FVG. So if price go here, I'm gonna sell, and another one, maybe another sell zone here. Now it trigger the entry. Okay, boom, and then price falling, right? The zone here falling. Oh, that enough. 600 pips. I already closed. Okay, I already, what did I say? I already closed the entry. Okay, you can see that. And this would be go where? They go to this. From the support become the resistance key level plus the FVG fair blue gap right here. Okay, that's clear. Yeah, anyone have a question? Anyone have the questions? Let me check. Okay. Okay, why move H4 to M5? What about H1 and M15? Are you speaking about liquidity grab? Are you speaking about the concept? A bit confused. No. Okay, whenever we talking about liquidity grab, right, I just want to show you how you're going to identify. For example, here, right, this one, okay, This is the ego high, correct? I just go and read. This is your ego high here. Okay, this is the liquidity, right? This is the liquidity, right? Previous swing high, swing low, round number, double top, double bottom, or trend line liquidity. Okay, whenever we talk about liquidity, they are referring to the smart money. I'm not respond. I did not see. I only look at the chart. Not that I don't want to respond. Okay. Whenever we're talking about liquidity, they are referring to smart money concept. Right? The traditional trader or the traditional, we taught to sell whenever we see double top, double bottom. Though double top, double bottom, or the trend line, or this for the liquidity, trend line liquidity, this is also liquidity, and this is the liquidity. This is the liquidity. That's why whenever you see, for example, you see this one, right? You see, I'm sure there's so many people who gonna sell at this double top. Okay, maybe you sell here. Okay, you sell again, price falling. Okay, you see, oh, this is a double top. I thought or Peggy taught me, or you learn from others channel, of course, right? They will say that if price pull back to the next line, we gonna sell here. This is gonna be your sell entry, correct? Whenever you see here, price form M pattern or double top, break below the next line, pull back, we're gonna sell. Yes. Okay, so here little trader gonna sell here, but then you see that price went a few pip, or maybe this is a H4 100 pip. Let's say you did not close. Okay, price falling after that is maybe you haven't unit close, you might want to sell again. Okay, so maybe there are so many traders, they miss when it pull back, go back up again, you sell. Why move from H4 to M5? What about H on M15? I'm asking because when price at H4 FVG, you went straight to M5 to look for the entry. Okay, if you want to see the confirmation in the at the key level, for example, you identify the key level, let's say H4, right? And the price rising. For example, maybe this is, for example, this is the resistance level. You ignore M15. Let's say this is H4, price rising. You want to see the confirmation whether price is going to reverse at this level or not. You need to go to the lower time frame. Could be M5, M15, M30, or H1, which is lower than H4, to look for confirmation, such as if there is a rejection, if there is a price action, or if there is any those like double top, or if there's a chart pattern. Okay, if you see the double top, okay, sometimes the double top and then like this one, price might falling. Okay, but sometimes at the key level here, okay, I go back to H4. Okay, I go back to the H4 here. Here, where is it? Go back to the H4 here. Back here, right? Okay, this is the resistance level. Okay, this is the resistance level. Okay. Let's say you don't know about FVG, you don't know about smart money. Definitely you're gonna sell here. Then you're gonna get stop out because price go back and get liquidity, clear the stop loss. Could be your stop loss for the sell entry, could be your buy stop order, and then you're gonna put the stop loss somewhere around here. But above that, for some smart money, they will know that okay, there is a smart money. They don't trade with the resistance level. This one they will identify the FVG, right? This is FVG for smart money. Traditional, we could just say okay, this is the first resistance level, right? Definitely here you say you're gonna get stop out. You don't know about the FVG or fabric gap. For me to confirm that whether price go to this level and then they're going to reverse, or they're going to the breakout of this level, which is my, let's just say, key level, which is the first resistance. I want to go to the lower time frame. you go to the lower time frame so you can get very early entry, and you're gonna have very tight stop loss. Whenever you go to the lower time frame, you're gonna have very tight stop loss because you see the confirmation, you have very tight stop loss. Let's say if you always wait at H4 to close, where is your H4 to close? H4 closing, okay, H4 closing, okay, you wait for the pullback. Sometimes it may pull back, sometimes it not pull back. Okay, give a pullback to the here, right? You wait for H4 to close. Your sell entry, maybe let's just say here would be your sell entry. One, right? One is your could be your sell entry. Okay, because your wait. But to me, I'm going to the lower time frame. I'm gonna go to the lower time frame. Where is my entry? My entry is gonna be here. I know that price has clear liquidity. Price has clear liquidity. Okay, I can go M15. Okay, M15, I saw that M like the M pattern. Or maybe I go to the lower time frame. I want to see what is price doing in the lower time frame, because if you're gonna stay in H4, you don't know what is happening in H4 candle. Okay, in H4 candle. So I go to the M, you could go M5, M15, whatever time frame that lower than H4. I want to go M15. Okay, oh, I spot. Okay, when price go up, all right, here I see double top, maybe I just sell. Okay, let's just say if I sell and I get stop out. After that, price has clear liquidity and closing with rejection and a long wick, quick reversal here, right? This is the price action. This is your confirmation that, guys, this is FVG, price gonna revert from this level. So when price closing with price action had clear liquidity, I could open my sell entry at this candle, and then I hold until I see, okay, price has closed below with the real body at this level. This is the low. This is the low. Whenever we're talking about the liquidity, is refer to smart money concept. Okay, this is the low, the wick, and this is close with the body. You can go to M30 as well. You can see that, right? M30, this is the low, right? The body is close below the wick, close below the previous high, meaning that, okay, I can hold my sell entry. So my sell entry was here. If you wait to H4, your sell entry is gonna be here. My sell entry is here. Where is my stop loss? My stop loss, I'm gonna refer to this week. And where is your stop loss? Then you say that, okay, you sell here, your stop loss is gonna be here. So risk and reward, I have more than you, for example, right? So this is the stop loss. And then let's just say you enter. Well, I enter here. Let's just aim for short. I short at this. Let's say we aim here. This is stop loss. I just put at the wick. Okay. So risk and reward, you see that 1 to 10. Okay. And then if they say you're waiting at H4, your entry was here. Okay. And your stop loss is there at the wick. Risk and reward 1 to 1.8. Okay. That's the reason why. Okay, that's the reason why you need to go to the lower time frame to look for confirmation. Is this going to be the real breakout? Is this going to be the just liquidity grab and then price is reversed? Right? So here, okay, another example, right? So over this equal high, price has trigger. One is your, let's just say your sell entry, right? You put your sell entry here. For example, I sell at the previous high, at the high. So this is your sell entry. Okay, my stop loss for the sell entry, I just put a slightly like maybe like at this level. This is my stop loss. This is my stop loss. Okay, and this is my stop loss. And above this equal high, which is M15, I go to the M15. Above the equal high, they're gonna have the, what is this above this one? Buy stop order, right? They're gonna have the buy stop order. Okay, they have the buy stop order. One is buy stop order. Second, let's say you sell. Only buy stop order, pending order, right? Buy stop order here. For the buy stop order, red. No, just red color. For buy stop order, if price break above, gonna trigger your buy, right? Your buy entry. Price had trigger and you happy. And after that, where your buy stop order, you put buy stop order. Maybe here is your stop loss, right? This is the stop loss for the buy stop. So it hit your sell entry, stop loss hit. After it trigger your buy stop order, make you happy. And after it's reverse and come back and hit your stop loss and then falling. So this is liquidity grab. All right. Okay. It makes sense the time to align with the what. Okay, it was a big problem for me. Thank you. You're welcome. In your explanation, whereas the liquidity gap, what you mean, where is liquidity gap? Is the liquidity gap the breakout buy position? This is all liquidity gap. Liquid mean the stop losses trigger. Yeah, this liquidity gap or stop hunt. Okay, this is, you can call one is liquidity grab. Second one you can say liquidity hunt. Here or here. Meaning you see that, right? You get a stop loss for both order and after that price falling. Okay, liquidity means stop losses trigger depending on how they would be beyond. That's why here liquidity, common location, previous swing high, swing low, round number, double top, double bottom, a trend line. You need to train. Okay, here gold, okay, had the trend line liquidity, which is there was one is here. Oh, anybody sell gold? Lovely price action falling at the M15. This is the confirmation. This is the confirmation in M15. If you go to H4, right, you don't see anything. You just see the rejection. If you go to the M15, oh, I see the confirmation. Then I sell my stop loss at this week. Okay, talking about the trend line liquidity, I have that because I saw there is a trend line liquidity. It was here. Okay, this is our trend line, correct? It is correct. Before price is falling. Okay, you need to train yourself, okay, to look for liquidity. This is a trend line liquidity, or maybe why they call trend line liquidity, because this is our trend line, strong trend line. We have more than 3 touches. So if price falling, you're gonna sell here, plus maybe we would identify one should be maybe here. Okay, maybe you would identify it your first support. You might would identify it your first support. Okay, you would identify your first support, right? So these are trend lines. So you see that price falling and clear, you will get stop loss. Definitely you're gonna stop loss. This is the trend line liquidity. Okay, this is your trend line liquidity. Break below here, they come to where? They come to the FVG. Why this FVG or fabric gap is important or is valid? Because this is the resistance or key level, correct? And this price is imbalance that push the price break above this key level. Before this one is used to be where the support level here, right? You see that this level, is hold, right? Rejection, a quick rejection here, many time, and it is only like smart money that can push the price break above or close above the key level. That's why this FVG is valid. Where this FVG I draw from this to this, which is here. This is the FVG, right? Price come, it doesn't, you see that? Price puts the price down here, which is smart money, puts the price down. They don't even care about trend line. The breakout trend line go to FVG and then bounce. You can see that the quick rejection. If you go to the lower time frame, what you're gonna see, right? You're gonna see the price action rejection with the long wick right here, right? You see that, and price is falling. You see, and after that it had rejected. What about the M15, right? You can see. Okay, you can go to the lower time frame. You can see that rejection, quick reverse. Okay, this is a trend line liquidity. All right. Okay, that makes sense, guys. If that makes sense, if that makes sense. Okay, so that is the trend line liquidity. Okay, I continue. Okay, I continue. So I think everybody get what I mean. Okay, good. Thanks for responding. Okay, continue. So they will say that you see the how to spot liquidity grab. So whenever you see those liability sharp spike, okay, price quick reverse at the key level with the long wick. Okay, at the trend line support order are created too long. So where is the liquidity grab? Liquidity grab meaning that where price has broken at the trend line and go to the point of interest, which is here. Liquidity grab means price have broken the trend line. Price have broken the trend line. That's why they grab your stop loss, right? Because you're gonna buy at this trend line. You're gonna buy at this trend line, but smart money doesn't care about the trend line. They go to the FVG. For the FVG is their POI, point of interest here. So this is your liquidity grab. You can stop out basically the trend line liquidity because you're gonna buy at the trend line, right? Price had retraced a few times, right? You say okay, this is a strong trend line, so price is falling, and then you just buy. And after that you get breakout trend line, you get stop out because price go to this FVG or their POI, point of interest here. They go to POI, which is this is the one is the FVG or fabric gap. This one liquidity gap, which is the trend line price trigger. Whenever talking about liquidity grab, meaning that you get stop loss, right? Because you want to buy here, correct? And then you get stop out, and after that price is reverse maybe to here and then continue falling. Why? It's just a quick reverse here at the FVG. There might be a remaining order and price is rising because you were to look the market structure has changed, has shifted from bullish to bearish now because price have broken this low, right? Before they make a lower low, lower high, lower low, right? Start to make a lower low, break this is change of character, and then pull back, and then you sell. and this comes from the key level or the FVG in H4. Okay. Yes, very cannot. Okay, you're welcome. Okay, continue. Okay, so quick return inside the range. Okay, I received they say that price closed back within the previous range within 1 to 3 candle. Very clear now. Okay, you're welcome. Okay, for those like a liquidity, you might have to train yourself, because you know a lot of the traders, they don't know how to identify where liquidity or like liquidity or liquidity grab. Okay, basically it just come and trigger your stop loss, and then it reverse. Okay, you see that multi time frame divergence. So higher time frame show no breakout, correct? You see that higher time frame is show no breakout, but only the lower time frame show the spike, or to tell you that is the price gonna break out or not. Okay, and another one, if you trade with the ranging or sideways market. Okay, I'm gonna show you. You ask me. Okay, you don't understand, you ask me until you understand. I'm gonna share with you guys. Okay, this is free, do not need to pay. So please come and support me. Okay, here, whenever you see price ranging, okay, or being a sideways, and then you want to know that is price going to break or not break, what you need to do, you need to draw the box from the body, not the wick. The body is not the wick. Okay, I'm gonna go to lower time frame. Let's just say I'm a scalper. Let's say I like to trade the lower time frame, for example, right? Let's just say maybe here you draw from the wick and the body, which is, I'm gonna start with this one. I'm gonna start with D one. So right in M15, right? M15. If you're gonna draw from the wick, if you draw from the wick, you don't know is it gonna break out or not break out, or just within the range. So you need to draw from the real body. The body is the real price. The wick is just like the high in the row, not the real price, right? So now I have the range. This is my range, my box, my ranging. If the body close above the box, then I know this is gonna break out to the upside or break down to the downside. Okay, and then you're gonna see that, boom, right? Breakout. I'm gonna buy when price come to the retest at this zone. M15, I can go to the M5 to look for the entry. Okay, right? So this may be the zone. If price comes, sometimes it may come in the box, okay, and or maybe touching and then go, right? You see that? Retest, breakout, retest, and we buy here. Where the stop loss, my stop loss below the box, or you can just put like below this. Okay, because we have confirmation that price has already break out to the upside. With this body, we wait for pullback, retest, right, and then you buy, right? You buy here. The stop loss you can put at like below, like this. Do this or can below this. Okay. That's clear? Should be clear. This is how you draw the box. Okay. Any question, guys? I'll pause here for a while. Okay, the next one is going to be my last slide for the strategies. Okay, so the strategy is going to be like retest, versus no retest. So for conservative, that's why for the conservative trader like I myself, I like to wait for confirmation. I wait for price to retest, I wait for price to break the level and then pull back. That would be the just now if I'm gonna trade with the sideways, the market being ranging, I wait for price break and then pull back, I buy. Okay, the advantage, you will see better risk and reward, confirm level flip, lower entry level, filter Fakeout. Disadvantage, may miss strong move that don't retest. That's why sometimes if I want to wait, right, for like this the box, some price will go back and then I buy. But sometimes if I just shoot, don't even come back, meaning I gonna miss. If gonna miss, never mind. To me, never mind, as long as so far it not like hit my stop loss. I don't win but I don't lose. Okay, this is for conservative. Okay, same, if price this is your resistance and price break above, usually I'm gonna like to wait for price to pull back from the resistance, become the support level or the flip zone, and then I buy. Okay, or another one for aggressive, no retest entry, enter immediately on the breakout candle or the next candle. So whenever you see the breakout, whenever you see like breakout with the candle here, right, sometimes they just open entry buy for the second candle, the stop loss they will put below. Sometimes price is just rising, but sometimes price might reverse. Okay, that's why those like aggressive, they might enter right now and then they might have a spare loss side if price is reversed, and then they might have another buy entry and then bounce, and then stop loss gonna put the same. Okay, which is advantage, cash strong, momentum move, don't miss explosive breakout, early position. Okay, high risk, definitely worse entry price, wider stop loss needed if you are aggressive trader. Okay, but I'm quite conservative. I like to wait for price to pull back, I see the confirmation and then I go. Okay, that is all about breakout or liquidity grab. Okay, now, okay, so let me list the what is this, let me list the example for multi-time frame divergence. Okay, as I understand, you draw box on H4, you go on H1, see the closing candle above the level, then wait. Okay, as I understand, you draw a box on H4, you go on H1, seeing closing candle above the level, then it's the one in H1, no showing breakout side in H4. No, whenever you see the price is ranging, I'm talking about the ranging, then you draw the box, right? You need to wait and the time frame that is closed. For example, here, right, I go to the lower time frame because I want to find the entry when price had broken the level of close above the level. Then I will find the entry. For example, here, right? For example, here, I'm gonna move back here again, leave. Then I'm gonna move back here. Okay, now I'm drawing in M15. I'm gonna wait for the M15 for the body to close above or close below, while I'm draw exact at the body in M15. Okay, if you're gonna switch to M5 where is the real body, then you might need to adjust, there might be the body there. Okay, but I'm drawing M5, my M15, my real body is here. I draw exact at the body, refer here. So if price close, right, so now boom, price close, I'm wait for price to back to the retest. Once I know that I saw this is a supply zone to me, that price close above with the imbalance here, I just want to go to M5 to see if there is any demand zone in M5. If there is a demand zone in M5, I'm gonna buy here. or here. Sometimes here might have the bullish OB, and then I might wait for price to go to the OB, and then I buy in the M5. Okay, but in this case, price just come back and it tests at the box, right? You see that, and then it rising, closing with the price action. Maybe I find another example. If you draw box in H4, you need to wait for H4 candle to close. Okay, and after that it's closed already, and then you can go to the lower time frame to find the entry, and then you will have really tight stop loss with better risk and reward. Okay, you guys clear? Or okay, let me find the H4. What this is what happening here? Why price just come from this? And okay, so H4 here, right? Maybe H4 here. If H4 price was also ranging here, right? This was the ranging in H4 here, right? And then you can see the price really close above and then go back. This is a daily time frame. Okay, let me just move here, right? This is the daily time frame. Price really close. What about you go to H4, right? You go to H4. Okay, you can go to H4. I would just H4. If you don't, H4 is gonna be like that. H4 gonna be like that from the body, right? Then you see that. Yeah, I see that. Price have closed above. So now I'm gonna wait for price either pull back in the box, or one, there is a FVG here. I have two scenario here. One is here. Second is gonna be where? Second is gonna be, they also have like kind of like, you know, supply zone somewhere around here. So this is gonna be my zone now. My zone I want to buy, right? But then we know that price has already falling to the zone, right? You see the price falling to the zone, right? You see that to where FVG or then come to this demand. You see here, okay, here. All right, is that clear? Is that clear? Please let me know. Yeah, okay, that's good. Yeah, okay. Okay guys, so I think that should be all for today. I hope you're learning something today, and what my explanation is clear enough. If you still like unsure, maybe next Tuesday you can come back and ask me again. Okay, if you said, hey Peggy, I still don't understand like this part, can you explain more, this and that? Okay, you let me know. I'm gonna see you guys again next week, same time. Okay, same time. All right guys, so that should be all for today. Yeah, I like the box concept. Yeah, I also love to trade with the ranging with the box. All right, okay guys, so that should be all for today. Thank you so much for joining me. See you guys again on next week, Tuesday. You're welcome guys. Bye for now. Take care. Bye bye.